Hey there, I'm Will Bridges, your host of Market Maker TV. You're trading TV for traders by traders, and we've got a lot of ground to cover today. Let's go ahead and get right to it. So I'm going to go ahead and skip over to the agenda here. And mainstream news, we're going to cover what the mockingbirds are saying and what they're distracting you from and the opportunities that might be behind that news. Fundamental announcements, pesky CPI, PPI. If you don't know what that is, pay attention. We're going to talk about kind of the effects of those things as well, okay, and what markets to watch. So interest rate projection, okay, what is the Federal Reserve going to do next? Are they going to make money more expensive or less expensive? What's the plan? And instruments to watch. I'm going to throw out a lot of different instruments that might move, how they might move throughout this session. So I hope you are strapped in and ready to go, okay? So far this year, just to give you a little bit of an idea of where we're at, this is my live money account. I'm up over 23% so far, eating that elephant one bite at a time. And, in March, we were up only 10%. People, only 10%. But it was a tough world out there in March. It was the hardest, the worst start for a president ever when Trump got elected. And we've had all the tariff mess. So I'm proud of this 23% number and the pace of over 60%. If you want to know how to do that, go to our website, schedule book a one-on-one. We'll see if we can point you in the right direction. You can do that for free, by the way. So only trade ideas is just ideas. Okay, this is for educational purpose only. Not here for financial advice. You got to risk it to get the biscuit, people. No such thing as a guaranteed trade or investment. So let's rock. So mainstream media, they want you to make sure that Donald Trump is still in the original Air Force One because the gift that he got from Qatar should make you angry about Republicans, and the Republicans should be angry that no, okay? Basically, the president got a gift from a Middle Eastern nation with a lot of money, and I think that means oil prices are likely to stay low, because if we don't fight and kick the beehive in the Middle East, that's good for everybody, for humanity, and also for energy prices. Okay, so I'm looking for oil to stay less bullish. I think sideways is probably, in order for oil for the time being. China deal. Okay, so we got 124% tariffs. Okay, that's now down to 30%, 90-day pause. We're only a few days into that. That news came out Saturday, Sunday, and that was the big gap up that we saw in Monday in the U.S. stock market. So we had big moves in the U.S. stock market the last couple of days. It's been exciting. Okay, just news that might happen started to come out in the middle of last week. So we've been very bullish. So if the news starts to complain that there hasn't been enough movement, it hasn't happened yet. Why don't we have a deal? Why can't we just figure out this multi-billion-dollar deal? They're going to complain soon. So I'm expecting a little bit of a retrace here on risk markets, and we'll look more at that in a minute. I've actually got a chart with some levels to show you. Raising the debt ceiling, that's the other big thing in the news, by $4 trillion. This is the spending bill. The government has not had a balanced budget since the 90s here in the United States, so I'm anticipating them to increase the money supply by another 10%. Which, okay, if we have a deal with China, stock markets could boom. If we don't have a deal with China and that news starts to go negative, well, let's just say things like gold, Bitcoin boom. Maybe not so much the stock market, okay, and maybe more so gold than Bitcoin. So pay attention to that. The combination of things that happens there is going to be fun to watch. Pharma price caps, okay, executive order, we're going to cut drug prices by 50 to 80%. That's good news if you're an insurance company, for example, like United Health. Okay, United Health is down almost 50%. Okay, this is an over $600 per share stock. They're down like $300 a share in the last month. Okay, so the company still makes money. They paid out a dividend of like $7 or $8 from the last quarter. So still a great stock. Okay, there might be a big opportunity on that one specifically, and really just in general. Companies that make drugs, on the other hand, might experience a little bit of pressure. Okay, so that should be interesting. It seems like Hims so far has been immune to that. Hims, for some reason, people are really hot on still, and that one has been moving like a rocket. Okay, so all of this stuff, more money in the system. I'm looking for things like, like SoFi, Robinhood. People are going to trade. People are going to borrow money. Interest rates are going to be a big deal. Moving forward, conflicts, wars, this is going to drive a lot of energy prices, and really just generally people feel better when there's more peace. Okay, so war is not going to be good for anybody, And prices typically go up because money gets printed and there's more demand for oil, so producer costs go up. So Ukraine, Russia seems to be winding down. India, Pakistan, hopefully not as serious as it might have looked here a few days ago. It did look like it was about to be World War III, and I just hope that that doesn't happen. Okay, so I am expecting sideways on oil as long as we don't have any crazy things happen. Okay, so U.S. interest rates. Okay, not expecting a hike over 30 days until the next scheduled decision day FOMC meeting, where Jerome Powell is going to tell us all what our future holds. So I'm anticipating strength, okay, on the U.S. dollar. I think yesterday we saw, I'll get to the CPI, PPI number, but we're at the bottom of this range that we've been in for the last 4 or 5 years on the U.S. dollar, DXY. So I'm expecting we keep rising like we did for the last 3 weeks in a row. Okay, so as this continues to rise, I think we see more weakness in gold, especially, if they put off raising the debt ceiling. As soon as we raise the debt ceiling, we could see a little bit of a retreat here on the dollar, a little sideways action. But we're not lowering interest rates, so I can't imagine we break out into this lower area outside of this purple box that you see on the screen until that happens. Okay, so I'm expecting dollar strength for the time being. That could mean weakness for the euro, for literally anything but the dollar. Okay, it is the measuring stick for most markets, and it will continue to be that way. Fundy calendar, CPI is the biggest one on the calendar, happened on Tuesday, came in softer than expected, but not crazy soft. Okay, so marginally lower from 2.4 to down to 2.3. Okay, so the Fed's not shaking in their boots like, oh my gosh, there's no inflation. We better hurry up and create more inflation. No, they're going to wait until that thing gets to 2% or makes a big move. So if we come out next month and it says 1.5, then they might do something early. But I don't see. Well, unless that happens, barring something like that, they're going to hold. And PPI comes out tomorrow. Powell's going to speak 10 minutes after that. That's the producer price index. If that comes out remotely close to, if it comes out positive at all, it's going to be higher than it was last month. Okay, and that's really the thing. Do we have more inflation than last month? Okay, well then I'm not going to cut rates and create more inflation. That's pretty much what Powell is going to be thinking, and that's probably what he'll come out and tell you after the announcement on Thursday. So stock market, this is a picture here of the S&P 500, the SPX, okay, 5,900. We drew this level a year ago, longer, okay, we knew it was going to be impactful because it is a magic number, okay, if you want to know more about the magic ratios and all that kind of stuff, then Fibonacci ratios, that type of stuff, then go to our website, schedule a one-on-one. We'll point you in the right direction. But I think 5,700 is coming. I think we get a little bit of a break. I think people get a little bit nervous that China deal is not closed yet. We need to hurry up and close a deal with China because we need to close it now. And why isn't it happening yet? And I think, a little bit of a take profit might happen. 5,700 I think is very likely. 5,500 also pretty likely. Either one of those, in my opinion, are great buying opportunities because I can't imagine, let's just say they're already talking about trying to close the deal. So somebody's going to get a deal somewhere and something will happen. I can't imagine that we give up, but thanks for watching this week's episode of Market Maker TV. If you want to check out some live market analysis, if you want to get more insight on your own trade plan and how to get to yourself to the next level, book a one-on-one. Go check out the live trading sessions that we do. Visit onlytradeideas.com. Again, my name is Will Bridges, your lead analyst and your host of Market Maker TV. I hope you enjoyed. Be good or be good at it. Take care.